Hi, my name is Grant Anderson, and today I'm going to be presenting my stock pitch on Arbor Realty Trust. Arbor Realty Trust is a mortgage real estate investment trust that's United States based, multifamily focused, and geographically diversified, with its main markets being Texas, Florida, Georgia, and North Carolina. So here's some quick facts about Arbor. Its market cap is $2.13 billion. Its enterprise value is $16.37 billion. Its IPO date is April 2004. Its current share price is around $11.04, and its target share price is $12.64. So Arbor Realty has two main business segments and two smaller segments within them. Their first business segment is their structured loan business, through which they invest in a diversified portfolio of financial assets in the multifamily, single family rental, and commercial real estate markets. And this is 98% bridge loans. In addition to that, they have a few mezzanine loans, junior participation interests, in first mortgages, and preferred and direct equity. In the last quarter of 2022, this business generated levered returns of over 16% on a 97% variable rate loan book. Their second business segment is their government-sponsored enterprise and agency business. In this business, they originate, sell, and service a range of multifamily finance products through things like Fannie Mae, Freddie Mac, Ginnie Mae, and the Federal Housing Authority. This business is capital light with high return on equity, which currently has a $28 billion servicing portfolio and around $2.3 billion in escrows, currently earning around $205 million in annual cash flow. So, on top of these two main business segments, they have two smaller segments. So, their single family rental business is encompassed as part of their structured loan segment. And some key highlights about this are that it produced $1.2 billion in 2022, and it has a robust pipeline with construction, bridge, and lending opportunities that investors will funnel through. So finally, their private label program, which is part of their agency business, allows Arbor to originate and sell financial products through conduit or commercial backed securities programs. They pool and securitize these private label loans and sell securitizations to third party investors. And after they sell it, they still retain the servicing rights and certificates of the bottom tranche of the securitization. Today, they have completed four securitizations totaling $2.2 billion. So now we're going to move on. Just note, here's a quick price volume chart over the past year of Arbor. So now we're going to move on to the investment thesis. So Arbor Realty provides a very unique opportunity to investors because they're fundamentally strong business. The first part of this is their in-house underwriting and risk management capabilities. This allows them to continuously service loans to mitigate risk exposure and promptly determine the causes of delinquency and find a solution. So this means they don't have to go through third parties, so it's a much quicker process, which aids them in their business. The second part is their strong, highly aligned management team, which has deep-rooted relationships across the commercial real estate space. This management team has a proven track record, which has persevered through multiple economic downturns, such as the 2008 financial crisis and the COVID-19 recession. And it has earned strong levered returns through these periods. So finally, this company has great financials. It has a dividend payout ratio of 67%, which is one of the lowest in the mortgage REIT business, meaning that they invest heavily back into the company, which is obviously a good sign for investors. And it has an 18% annualized total shareholder return over the trailing 5 years, which is industry leading. It also has an 18.2% ROE in 2022, which is one of the highest in the industry. So Arbor also provides a unique opportunity to investors because of market mispricing. In a report issued on March 14, 2023, Ninja Research claimed that Arbor hid its toxic mobile homes portfolio to manipulate stock price and avoid insolvency. And $599 million of Arbor's escrows evaporated overnight, and the company's escrow balances and revenues are fake. So this led to an over 17% stock price drop over the following 2 weeks. The problem with this is that This was just a false report. It was proven to be false by Arbor Realties themselves and has been shown that Ningi held significant short positions in Arbor at the time, so it would be in their self-interest to sway public opinion out of Arbor. So this can show that it was just a false report aimed at bashing Arbor and lowering stock price. So it's mispriced because investor looked at this and said, "Oh, this is a very terrible stock. We shouldn't buy this." So it's selling at much lower than its intrinsic value. The second reason is that the market has mispriced Arbor, is that the market is overestimating the exposure Arbor has to rising interest rates. So Arbor primarily focuses on senior loans that commonly have floating rates of Libor and SOFR, which allows them to hedge against rising interest rates. And since the interest payments on these loans will increase as the rates rise. So while rising interest rates still would have an impact on Arbor, it's not as much as the market would believe because we obviously have these rising uh, interest rates and we have the floating loan. Mhm. So next, Arbor has two main catalysts that will occur in the near future. The first is their annual announced repurchase of $50 million worth of shares. Since Arbor is undervalued and will be when the repurchase happens, this will lead to an increase in share price because shareholders will know that this will immediately boost earnings per share since there's less shares on the market. And the second catalyst is that there's likely going to be a mild recession in 2023. So some key signs of this are the recent bank failure, rise in unemployment mainly in the tech sector, as well as an inverted yield curve on bonds are all signs that point to a mild recession. So if this were to occur, the Federal Reserve would obviously try to combat this by boosting economic activity, and they would do this through cutting interest rates to combat this, which will help Arbor as it would decrease funding and borrowing costs and increase interest income. While a recession may not seem like a good catalyst, as it seems like less people would be interested in taking on a mortgage, other industries such as healthcare are consistently growing through this time, even when the tech sector employment has decreased. Unemployment has increased, I mean. So this means that the market for mortgages would not be greatly affected. So moving on, there's really five main valuation multiples that we use to show that Arbor is undervalued. So to start, the trailing and forward PE ratios are both quite low, which indicates that the current stock price is low relative to earnings. Furthermore, the forward PE ratio is smaller than the trailing ratio, which often means that analysts are expecting earnings to increase, which is a good sign. And just to note, I'm using diluted outstanding shares in both the PE ratios because it portrays a more accurate picture of Arbor because it factors in things such as stock options instead of just the main business. So moving on, the PB ratio is less than 1, which means that the market is valuing the company at less than the total value of assets, which is showing that it's undervalued. Next, to move on, while this EPS may seem low, in comparison to other companies in the mortgage REIT industry, it's 6th out of 44 listed on FinViz. So this shows that it's actually a high EPS, indicating a stock that is undervalued in comparison to the market. Finally, the intrinsic value at this time is $12.36, which is 12% higher than the market price. And just note, this does not factor in catalysts or anything from my investment thesis. It's just valuation multiples. So this is just the base case. It doesn't factor in downside or any of the catalysts, which could be the upside. So to move on, there's a few key risk factors that could affect Arbor. So first, if the Federal Reserve continues to hike interest rates at a huge rate, a this would decrease demand for mortgages and make it more expensive for Arbor to borrow money. And while it did previously say that Arbor, while I did previously say Arbor is hedged against inflation, a continuous and large increase in interest rates would it may just be too great for Arbor to handle because they do have other products that don't that are more affected by rising interest rates than their floating rate loans. So next, secondly, if mortgage trends change over time to disfavor bridge loans, which account for over 50% of Arbor's products, this would lead to less interest income generated and overall less profitability, which would obviously be a very bad thing. Finally, if Arbor's letter of credit is not renewed by one of their lenders, Arbor would suffer a reduction in cash flow from operations as they would breach obligations with Fannie Mae. So this is because Arbor satisfies most of their restricted liquidity requirements with this letter. So if they didn't have this, they wouldn't be able to prove it, and that would breach their obligations. So to hedge against these key risk factors, we could put a stop loss order or buy put options at around $10 to limit potential losses to 10 to 12%. So to summarize, we recommend longing Realty Trust because it's currently undervalued by 12% because the market misunderstands Arbor's exposure to rising interest rates and the stock price has been discounted by a false report, giving us a good deal. So we believe there's two potential catalysts that will drive up share price, including a $50 million share repurchase and a mild recession that will cause the Fed to cut interest rates. So, using multiple valuation methods, we find Arbor to be undervalued, with its intrinsic price being around 12% higher than the share price at base case. So, finally, to protect against the key risk factors we mentioned, we can put options or place a stop loss order at around $10 to limit losses to 10 to 12%. I want to thank you for listening to my stock pitch on Arbor Realty Trust, and I hope we invest in Arbor Realty Trust. Thank you.